to discuss more on the implications of the tariffs, on how this could impact the global as well as the emerging markets, we are joined in by Peter Cardillo, the Chief Market Economist at Spartan Capital Securities. Hello and welcome, Peter. Thank you so much for joining NDTV Profit. First question that everyone is talking about is the impact of what the Trump tariffs could bring. Now there is going to be reciprocal tariffs that is going to be implemented on almost all countries. That includes India as well. Want to understand your take on what could this lead to growth for both the US as well as an emerging country like India?
Well, I think, you might say that the meeting was somewhat successful. They talked about doubling their bilateral trade to 500 billion, over 500 billion in the next 5 years. But, it's yet to be seen what kind of tariffs will be imposed. Now, there's no question that the Prime Minister Modi came well prepared and probably going to make some concessions in terms of Indian tariffs versus the United States. But I think it's too early to come to any conclusion. In fact, the reciprocal tariffs that Trump signed off on today probably not going to take effect for another 6, maybe 8 weeks. And so it's just a wait and see. And I suspect that, there will be some sort of an agreement between India and the United States. And the question is, how much and what kind of concessions will be made in terms of India and buying energy products from the United States.
Well, there is consideration about the wait and watch approach on when these tariffs would be implemented immediately. Well, there would be also retaliation coming from other countries as well. So how would this lead to US as a country on terms of its growth prospects and the inflation already remaining on the stickier side? Want to understand your take on how one should read the markets currently in terms of where the economic uncertainty is concerned?
Well, to begin with, like I said before, it's going to take some time. And President Trump was very clear that reciprocal taxes will be placed depending, on what kind of taxes are levied on the United States. So, it's basically 1 for 1. But the markets seem to have liked it because it's going to be a wait and see game. And until the tariffs are implemented, and we know exactly how much and what countries will be affected, and obviously we're talking about India, I think, the markets will continue to do what they want to do. But if agreements are not reached, then the markets will probably react negatively, and because that would mean that a trade war would be prolonged, and that means the possibility of the global economy surrendering maybe a point and a quarter of GDP growth. And that would be pretty much across, the spectrum, whether it be India, whether it be Europe, or whether it be Mexico and Canada. And so I think, what we're seeing here is a strong effort by the part of the Trump administration to implement tariffs, but to make sure that they get concessions and vice versa. So it's a wait and see game at this time.
A wait and see game is what we are seeing at the moment. But I want to understand from you what, according to you, is going to be the path for the interest rate forwards. Now, while the Fed have kept the interest rates on hold, I want to understand, is your view aligned with them? How many rate cuts do you anticipate in 2025? And what is your view on the overall inflation picture that is building for US as well as spiral effect on the other countries as well?
Yeah, good question. We had the Producers Price Index that came out yesterday, and obviously the headline numbers were very disappointing. And the core rate came in basically in line with the market was expecting. But if you read into the total report, there were some components that suggest that over the next maybe 2 months or so, that inflation probably will begin to head down again here in the States. Now, we'll have a glimpse of that in about 12 trading days when we get the PCE price index. And so, in terms of a rate cut, I think the Fed is going to stay on hold at least for the first 6 months of this year and just wait and see. Not so much how the inflation numbers play out, but what will be the effects if a trade war does go into motion, and what would be the results from the tariffs, that is inflationary impact. And so, again, I don't think the Fed, they made it quite clear that they're in no rush to rate cuts, and that's a clear message to the market that it's going to take some time before they cut. If they do cut, I suspect it could come in the latter part of the year, and most likely maybe one rate cut.
Okay, so maybe one rate cut, and for the 6 months we can see and hold. I want to understand your view on how can one play with the emerging markets right now. Now, if you're considering what is overall happening, we are seeing the dollar strengthening, looking at rising US bond yields, and along with that, the escalation of trade war. Let's take India, for example, about 18% of exports coming from USA. So how would these three factors, considering all this, how could one look at the emerging markets right now, like something like India?
Yeah, well, the dollar has been quite strong now for several years, and we saw emerging markets weather that storm. And I think that the dollar will continue to remain strong because the fundamentals in the United States are still good. And, even though we have higher inflation, but that means that yields are not likely to drop very much from these levels until there's a clearer picture of what may or may not happen with inflation. And so I think the dollar will continue to remain strong. Will it go much higher in terms of the dollar index from these levels? I don't think so. We're probably looking at a peak level of 110. And in the interim, just within a trading range, something that we have been experiencing over the past 3 to 4 weeks.
All right, very interesting take, Peter. Thank you so much for joining to NDTV Profit and sharing your perspective on what this could mean for the global markets and India forward. Thank you once again for joining.
Thank you for having me.